to take a minute and bring this to life a little bit. First of all, as a result of, Latitude Financial, right? They had 14 million customers impacted as a result of one employee's credentials being compromised, just one. Now, the other one just to think about is, again, Flagstar Bank, right? They were breached. All of their clients' social security numbers were stolen. Over 1.5 million of these customers. But within 90 days, there was a second reinfection where this perpetrator came in and reinfected this organization again to steal some additional data. Right? This is the reality of what's happening today across the threat landscape. And the question is why? What are they looking for? Well, there's a financial piece of it, but the reality is it starts with sensitive data, right? The PII. They're looking for the social security numbers, the bank account numbers, the credit card numbers, all of those types of things that reside within databases. All right, we're going to talk about database security here in one of the upcoming slides. But again, this is a target. Now, right, some of the challenges, regulation's great, but sometimes regulation is difficult. It's hard to implement, right? It can be very expensive. Again, the other challenge is really around consumer trust, right? If there is an actual breach to your financial institution, how do your customers look at that, right? They start distrusting your financial institution and taking their money and moving into a different financial organization because they feel more secure. Partnership complexity. We talked about this a little bit earlier on the panel, but again, working with these third parties, right, bringing them in to the organization, there's a lot of complexity with that. And the interconnectedness ties into that piece as well, right? Doing business with third parties, managing, monitoring the risk of these organizations. Now, here at TrustWave, some of the things that we're doing is we're actually tracking the various threat actors that are going after financial institutions. And you see that here on the left. These are the top 10 that we're tracking over the past 365 days. But the other side of that equation is just not tracking them, but understanding what they're doing and their techniques and tactics. I want to just ask the question, something to think about, right? Does your organization, are they tracking these threat actors? Do they know what they're doing? And if they do know what they're doing, are you using that threat intelligence to build out your security controls and manage your risk? Right. Now, there's a list of mitigation strategies based on what these threat actors are doing. And I've got a report that will follow this. But I want to talk about just a few of the mitigation techniques that you should be considering today. First of all, around vulnerability assessments, right? The question that I ask the audience is, are you doing vulnerability scans today? Are they continuous? Are they looking at things beyond the operating system? Are you looking at software vulnerabilities? Now, the reason I ask this is Clock, for example, they actually exfiltrated a number of organizations using PC Anywhere and Move It, right? And if you are not doing, more of the application assessment as a part of your vulnerability assessment, those are things that you need to start looking at and using and leveraging. Now, pen testing and threat hunts, I'm going to bring those two together and talk about them as one. Most organizations I talk to do one annual pen test a year, right, as a compliance check. But is that really good enough, right? What we're starting to see, right, is organizations moving to more of a quarterly basis, right? Because the reality is, right, your threat posture is changing right? More than, once a year, right? That once a year test is great for a point in time, but really an assessment should be done more than just once a year. And to dovetail that into threat hunts. Now, this is something that I talk to a lot of board of directors, a lot of folks, and they are asking for not only a pen test to be done, but they also want a threat hunt done. And why is that? They're looking for that health check. They want some assurance that not only is their environment secure, but a threat hunt really looks at something different than a pen test. A threat hunt just looks for vulnerabilities that are exploitable. A threat hunt is looking if there's a threat actor operating within your environment, right? Something that you may not know about. And this is beyond just looking for IOCs. This is really looking for, these CLOP and some of these other folks. The days of them banging around, running into things, kicking things off, so your systems light up and say, hey, there's a threat actor, right? They don't operate like that. They conceal their tactics, what they do, how they do it, and also how they go about exfiltrating the information out of the environment. This ties into one of the other components, which is I touched on earlier, is databases. Now, database security is something that's often overlooked, but it should not be, right? Trustwave, we have one of the top 3 database security solutions in the industry. And whether you use ours or any of the other 2, right, you should have a tool that is looking for database specific vulnerabilities, misconfigurations, and user privileges. We see a lot of breaches happen where basically a piece of malware comes in, leverages a credentials, and those credentials are then leveraged to get into a database and exfiltrate information. So very, very important to leverage that. The last part I'll talk about is third-party systems are secure and protected, right? We talked about that interoperability, that connectiveness list, right? But start looking at what the posture is of the folks that you're working with, whether they're business partners, right? Whether, their connections with APIs. Each one of those should be tested on a regular basis so you understand what the posture is of those third parties. Now, I only have about 10 minutes today, but I wanted to leave you with this report. This is a report that we produce here at Trustwave, really around the financial sector. This is going to go into much deeper into the topics I talked about today. In addition, it's going to talk about AI. It'll talk about some of those various threat actors and their techniques, but also there's a list of mitigation tools for each one of them based on what they're doing. Some of the things I'll leave you with again is make sure you're leveraging this information and it's just not a point in time. But again, have good threat intelligence, understand what these threat actors are doing and how they're doing it. But more importantly, bring those techniques in and make sure that your tools are being tested properly. Thank you. That's all I had for today, unless there's any questions.
Thank you, Eric. One question for you, because you mentioned quite a few what we may call technical terms such as vulnerability, assessments, pen testing, and such like.
Mm-hmm.
Now, how important is it for non-IT and information security professionals within our financial industry? How important is it for them to have a general understanding and knowledge of those terms as it relates to risk?
Yeah, so it's critical, right? And risk is measured based on those vulnerability assessments or those pen tests, but then really what is the security posture of an organization at any given time? And some of those contributors are vulnerability assessments, as an example, right? Taking that information, And then looking at a specific threat and how well you are patched against that specific threat, right? And so this should be just one of the areas where an organization, the compliance organization, should be a piece on seeing where they're at any given time, right? So they can understand what the risk posture is. And that risk posture can be leveraged in a couple of different ways. Oftentimes when there's a patch, it may take 30 days to push out to an environment. But if there's something that's targeting your industry and there's an exploit, you may want to shorten that window to maybe a week, right? To make sure that you have protection. So hopefully that helps address the question.
Okay. I want to follow up another question on that, because you talked about patch management and so. What would be the likely impact of improperly patched systems? Again, we're trying to help persons to understand the whole question of risk and why some of these measures and mitigation measures are important. So what is the impact of having improperly patched systems?
So the impact gets into that $5.9 million breach, right? So when we look at the threat actors, right, those are the systems that they're targeting to breach an environment. So they're looking for a application that has not been patched properly or an OS that has not been breached properly to exfiltrate or to exploit that. And then once they have a foothold of one specific system, they can use that one system to move throughout the organization. And this is where patching is so critical and such an important piece of understanding risk to an organization is, what systems are patched really translates into what the risk is and what the probability of a threat actor taking a hold of that device.
Okay. I just want to invite any questions from the floor at this point or online. And while we wait for those possible questions, you mentioned 74% chance of, I think it was a 74% chance, or 74% of the companies are being affected. Now, this is a global statistic that you're looking at.
That's correct.
How does that, if you can, how would that translate to us in the Caribbean?
So again, these are financial industries across the globe, but I would, really that translates into, I would bet 74% or somewhere in that vicinity of the folks in the Caribbean have had some type of an event that have occurred, right?
Okay. So I know one of the things we have challenges with is disclosing when we have been affected. Now, from your perspective, how important is it for us within the financial institutions to share that kind of information with each other?
It's definitely critical. And this gets into having a solid communication plan, right? When there is an event, being able to share that with other financial institutions, say what happened, how it happened, what that threat vector was, right? And this is almost where, it's good to have a security financial risk group where you talk and communicate openly and on a regular basis. And this is important because if it's, sharing information is sometimes tough, but if, again, you start trusting each other and working together to share that information and leverage it, right? It becomes more actionable and is more beneficial.
Right, and it is important because, again, coming back to the central bank's report that was carried in the nation yesterday, they were talking about the interconnectedness of the financial institutions. And so because they're interconnected, what would be the implications if one is breached?
Yeah, this is, sharing that information, and this is the timeliness of sharing it, right? This would allow the other banks to either sever that connection if necessary, or put in some additional compensating controls to ensure that specific organization that was breached did not allow that piece of malware or ransomware to spread across that interconnection and infect another organization.
All right. Okay, Eric, I want to say a very big thank you for your presentation and being around to answer the questions. Unfortunately, we're out of time for this particular segment.
Sure.
But again, you know, we hope that this is not the last time the persons in this room will be hearing from you in any capacity. So again, thank you. And we look forward to hearing from you again. Thank you very much, Eric.
Thanks, everyone.
So now we're going to look at the question of cybercrime, a global financial crime issue. We're going to have an overview of the IRS criminal investigations and cybercrime trends. Now, this will be done via a recording from Special Agent and Acting Deputy Attaché, the IRS Criminal Investigation, Caribbean region of the US Embassy right here in Barbados. And this is Tiffany Ramsey. She's going to share her thoughts. Unfortunately, she can't be here with us in person or live. So what we have is a pre-recorded statement from her, and we'll go ahead and share that as she speaks on the whole question of cybercrime, a global financial crime issue.
For the Caribbean region for IRS criminal investigations. Criminal investigations international footprint currently consists of 13 different posts overseas. The typical post is staffed with an attaché, a deputy attaché, and an investigative analyst. My counterpart, who actually sits in Barbados, and I cover 26 countries within the Caribbean, which include all of the English-speaking countries. Specifically, the duties of an attaché vary, but our consistent mission is to, one, assist our field offices in the US with financial investigations that have a nexus to the Caribbean, and we are staffed to be a liaison between the US field offices for our agency, our law enforcement partners, and our financial institution partners that are overseas in the Caribbean. Also, our duty is to provide assistance, training, and support to our law enforcement partners and financial institution partners within the region. And lastly, our mission is to support and execute the mission and objectives of the U.S. Embassy, again, within the Caribbean region. To give you all a little background on what IRS criminal investigation does as it relates to cybercrimes, I'm going to play you a very short video that lays out our mission and the type of investigative work we do within the division.
IRS criminal investigation has been following the money trail of financial crimes for more than 100 years. IRS CI special agents' financial expertise has uniquely positioned them to investigate financial crimes in real life, on the blockchain, or with ties to the metaverse. Here's what we're seeing. Fraudsters have invented new techniques to defraud investors, launch rug pull schemes, artificially inflate asset prices, and more. They will infiltrate digital wallets, promise unrealistic monetary returns, and hack exchanges. The blockchain enables investigators to see the trail of financial crimes, but the ultimate beneficiary remains anonymous. Our job is to find the bad actors behind the crimes. During FY22 alone, IRS CI seized more than $6.9 billion from cybercrimes. Report cybercrimes to IRS Criminal Investigation. What we do counts.
So that very short video was just mention some of our emerging trends that I'll get in a little bit more detail about. Something that we have emerging are NFTs. Those are non-fungible tokens, and NFTs are digital collectibles, and NFT reserves a blockchain authenticated certificate that makes each item unique, and which the uniqueness is what makes it a collectible. Some of the NFT emerging trends include fraudsters consistently inventing new techniques to defraud investors and operate multiple scams, including rug pulls, copycat scams, and fake NFT launches, and many others. So hackers consistently devise new techniques and hack accounts to infiltrate wallets and to gain account access to stolen tokens. Another emerging trend that we are starting to see is decentralized finance. And some of these things you may have heard of before, or some of them may be new. I know at some point, cryptocurrency was all new to us not that long ago. So some of these things you may not have heard of before, but you will soon hear more about them. In relation to decentralized finance, or DeFi, refers to financial services provided to the public blockchain, utilizing smart contracts to automate the transaction flow and ownership transfer. DeFi is a way to provide financial services like purchasing stocks, insurance, or obtain loans without the need for third parties like banks or brokerages. So this is something for our financial institutions partners. This is something to really look out for. Another trend we're seeing are crypto hacks. And due to the regulations that are very limited, criminals are able to target virtual currency exchanges to steal cryptocurrency. They're doing that by using phishing scams and hacking scams. And those in particular are not new. Those are new to newer to the exchange, stealing it from currency exchanges, but most of us are very familiar with phishing scams and hacking scams, especially in the financial institution world and in the law enforcement world. A case example of one of these scams was in 2006, hackers targeted Bitfinex, which is a cryptocurrency exchange, and stole billions of dollars. And IRS special agents were able to trace those billions of dollars of stolen Bitcoin to a particular subject and his wife. Ultimately, in February 2022, they were arrested for the alleged conspiracy to launder stolen cryptocurrency. And the IRS agents were able to seize the stolen Bitcoin, which was valued over $3.6 billion at that time. And at that time, that made it the largest seizure in US history. And just some of the stats that we had in our last fiscal year. So our field offices throughout the country, throughout the US, there were 128 total cryptocurrency investigation, 62 of those involving tax, 66 of those involving non-tax, so more money on the lines of money laundering. There were over 100 in cases completed, and the conviction rate for those were 93.4%. So a pretty high conviction rate for those types of crimes. And there were a total of 66 individual sentenced. And the total CI seizure value, which was also mentioned in the video, was approximately $6.9 billion for the fiscal year of 2022. So I know, unfortunately, I cannot be there, so I cannot address any questions in person, but a few questions that usually come up in these cases, especially in a sector if one is not as familiar with some cryptocurrencies, is cryptocurrency good or bad? So more than likely, cryptocurrency is here to stay. It's nothing we can do about that. It's not going anywhere. However, criminals commit these type of crimes because they see an opportunity to profit. And if there's an opportunity to profit, they will commit the crimes to gain those profits. So it's our job to work together, to work with your law enforcement partners, your financial institution partners, so we can combat that criminal activity, because it really does take a team effort to combat those types of activity. Another question we get is, what should people know about cryptocurrency? So cryptocurrency is a digital currency where all transactions are detailed on the blockchain. And then another question we get is, does crypto exist in a place? And it's kind of a hard concept to wrap your mind around a little bit if you're not familiar with cryptocurrency, but the actual place is the blockchain. So this is where the transactions would reside. But unlike cash transactions, all crypto transactions are documented on that blockchain as opposed to being documented in a bank account. So I know my time is wrapping up. I can share my contact information. If anyone has any further questions, please feel free to reach out to me. Edward have my contact information, and I thank you all for participating in this conference. And I look forward to working with you and meeting some of you. Thank you.
Okay, so we were able to hear from Tiffany Ramsey a little bit about the global financial crime issue and the functions of the IRS Criminal Investigation Unit. And the thing is, we realize that all of cybercrime is about money, going after the money in some shape, form, or fashion. And so for us in the financial industry, it is important then that we are able to protect that money as best as we could. And one of the things that I think one of the critical things for us to be able to do an effective job of protecting the money, and in many cases, the money is our clients' money, most of whom may be very, I say, quote unquote, poor persons who are maybe just trying to save a dollar for when they get into retirement. And if you could understand the impact of thinking all this time you're putting your money down and then only to find out that it has been taken through some means that you may yourself not necessarily understand. So I think it is important for us in the financial industry to really understand the extent of cybercrime, the extent of the impact of cybercrime, and that it should be very much more on our thoughts that we have a duty, a responsibility to ensure that we arm ourselves with the knowledge, the information, so that we can then effectively protect that money of our clients and customers. Now, we were talking a whole lot about risk, and we know that with risk, there's always the question of mitigation. And we know that cybercrime always targets the digital assets of the organization. So then how do we protect those digital assets? We would have mentioned some of the technical measures. And now we want to talk a little bit about this whole question of cyber insurance as a way to safeguard our digital assets. And we're going to be looking at the requirements, the coverages available to us, and examples of various claims associated with cybercrime. And we have online Max Pragnell, and he's the cyber practice leader at a division of Gallagher Insurance. And so I'm sure that Max will be able to give us some critical information that we can take back to add to the arsenal of tools that we use to mitigate some of the cyber risks. Max, over to you.
Hi, good afternoon, everyone. I hope you can hear me okay. Thank you to CariSec and Edward for arranging this conference. I'm sorry I couldn't be there today. I really wanted to. Just a quick introduction to myself. My name is Max Pragnell. I am the cyber practice leader for IIB Re, which is a part of Gallagher in the Caribbean. I'm based in Kingston, Jamaica, but my remit is the entire Caribbean. So I regularly travel to Barbados and Trinidad, Cayman, and various other Eastern Caribbean islands. And my focus is very much cyber insurance, which is an area, I think, in the Caribbean that's fairly untouched. It's got fairly low penetration relative to other regions being the US, Canada, and Europe. So I think this is a very important discussion and one I often have with companies in the region. So I'm just going to quickly share my screen. Okay, hopefully you can see that. So as I mentioned, I'll be going through sort of the core coverages. What is cyber insurance? That begging question. I'll be going over what's sort of needed to get cyber insurance nowadays, because the sort of landscape in the market has changed quite a bit from, say, 5 years ago, where it was fairly easy to get cyber insurance. It was only a few binary questions. Do you have a firewall, for example? That has become a much more complex underwriting process. Sort of to the theme that we've been talking about today with the rise of ransomware, sophisticated threat actors. These insurance companies want to make sure that companies like yourselves are, taking the best steps to protect yourself. And finally, I'll just go over some real cyber insurance examples that Gallagher has had involvement in. So, core coverages. For the sake of this presentation, I've sort of included the typical coverages that we see in a cyber insurance policy, the first party and third party. Now, I'm not going to go through all of them, but I will stress the coverages that we do see the majority of claims stemming from, right? So the first party on the left, that will be costs incurred directly to the company. And the first one there, which I like to highlight, is incident response. Now, incident response is part of a cyber insurance policy, and it's probably one of the most unappreciated coverages there is. This is a panel of vendors which cyber insurance companies have already pre-contracted with. So this could be IT forensics, this could be ransomware negotiators, data restoration, public relations firms, credit monitoring. It could be the case that companies want to work with their own vendors, which is sometimes fine as long as we approve it with the insurance company. But I do like to stress that this is very much included in the policy. You don't have to arduously try and find these experts yourself. And as we would have seen in a very recent example in Trinidad, the need to engage with these experts as soon as possible, say with the PR teams, for example, how to respond to the breach is very, very important. And these consultants can be very costly if you were going to do them out of pocket. The second would be business interruption. So very similar to, say, a property policy. If your warehouse burned down, what if you suffered from a ransomware attack? You were not able to access your files, you can no longer operate as usual. This covers your lost revenues and additional expenses to keep you up and running in the event of this catastrophic event. This also extends to managed service providers or any sort of tech provider that you may have a contract with. So the very recent one and the big one that we've been talking about today, the Move It transfer tool that was compromised, that is a good example of an outsourced service provider or tech provider, I should say, where they were compromised, impacted several companies, and they were able to cut. Where we just heard about the various different ransomware groups. If you do have that extortion demand, that can be very much covered by your insurance policy. Switching over to the third party side, so litigation, and one that we're seeing very, very much increase in the US, but I'm sure it's going to be more topical in the Caribbean with the rise of our Data Protection Act, privacy liability. So if the company is at fault or negligent for having individuals' data compromised, we've seen lots of these examples in Barbados and Trinidad, as well as Jamaica over the past year. This would cover defense costs and settlement with that, say, privacy attorney or breach coach that would be included in the policy. I won't go into too much depth on the other coverages. I'd be happy to take that conversation offline, but those are sort of like the big coverages and the majority of where we see claims stemming from. So what's actually needed to get cyber insurance nowadays? As I mentioned, it was very easy a number of years ago. It's a little bit more complex now. So up here, just for the sake of this presentation, I've included sort of the 5 prerequisites that I often go through with companies. I'm not going to go through each. I think you're fairly familiar with many of them, but I do like to stress this first one and the last one. Multi-factor authentication, which has been mentioned several times today. This is sort of a threefold requirement. So MFA for email, MFA for remote access to your network, which could be remote desktop protocol, and the third one being privileged accounts. Without that, it's very difficult to get cyber these days, but cyber coverage these days. But it is very much something that we work with managed service providers to help you get into that position. The final one is employee training. And I do like to stress this one, as many people have mentioned today. A lot of the attacks that we've been seeing are not, these threat actors, what we say, scaling the building. They're just walking through the front door. And that's employees clicking on things that they shouldn't have. About 80% of cyber insurance claims, believe it or not, stem from human error. It's not a complex backdoor compromise or whatever it may be. It's simply employees clicking on things that they shouldn't have. So employee training is very important. There are lots of different sort of automated providers or more bespoke plans out there. But this is very much an area that we like to discuss. And then finally, sort of this red, amber, green section is just another area that I like to point out. So if we were to have a conversation, we would very much go through what's absolutely required, what's ideal, and what's most ideal to cyber underwriters. And so finally, just going over some claims examples, so there is sometimes a bit of skepticism of insurance, as is in any industry. But we see all types of claims of different sizes. And I'd say probably the biggest industries that we see cyber insurance claims stemming from over the past year would be professional services. So as Jerry mentioned earlier, the law firms would be included there. Also financial institutions, and then healthcare. Those are the 3 industries or 3 areas that we see year over year, by far the biggest in cyber insurance claims. And so just going over 3 examples, the first one being a manufacturer ransomware. Now this could apply to any other industry, but this was a very real example that happened to one of our clients in Canada. They came into their offices, their files were encrypted. They had a 5 million Bitcoin demand on their screen that was needed to be paid within 7 days. Otherwise, they faced that second double extortion where they'd release that information onto the dark web. The incident response team that I mentioned, so that would include the ransomware negotiator who does this day in, day out. They worked with that company. They negotiated down the ransomware payment. It was approved by the insurance company, and it was paid on day 5 to reduce any further damage. The ransomware group did not post it on the dark web, and they were able to begin the restoration afterwards. Second example is trucking business email compromise. So this is that very classic example, which many people have discussed today, of someone impersonating an accounting department. So in this example, they had a tax liability bill of $178,000 US. That director had received a notice of the accountant changing their account details. And before he noticed that had happened, that it was fraudulent, he had already sent 50,000, three installments of 50,000 before he noticed. That was covered by the policy, I think subject to maybe a 10,000 deductible. So 140,000 was covered under the policy. Now, I've seen various different types of this sort of incident happening in the Caribbean, including here in Jamaica, with amounts going over 7-figure amounts to fraudulent addresses that were unrecoverable. And then finally, just to sort of give an example of what the on-premise or internal threat may be. So an example of a credit union which had a disgruntled employee. That employee was terminated, and as a retaliatory sort of action, she didn't have her security clearance revoked. She went through the files, deleted 21,000, 4,000 directories, totaling 21 gigabytes of data. Now, as I mentioned, within that incident response team, you have that data restoration team. That could be regional, that could be international, and these sort of teams, they typically charge several $100s US an hour. If they're working on it for, say, a month, that could really amount to some heavy insurance claims. I appreciate that was quite a lot of information to digest in just 10 minutes. I'd be happy to take the questions or conversation offline. My contact is up there right now. But again, thank you very much, Edward. I'd be happy to answer some further questions on the call now.
Thank you, Max. One question for you. So you mentioned a number of conditions that should be met. I think you talk about things like multi-factor authentication, backups, and so forth. Now, let's say I have all of those in place in my organization when I take out a policy, but sometime during the course of the day or during the course of time, some of those controls or measures fall by the wayside and I am attacked. I suffer an incident. How does that affect my claim, or how does that affect my claim for an incident such as that?
So usually the process works by, before inception, you'll go through a proposal form, which usually I help with, and you basically disclose material facts, whether you have MFA or not. And throughout the policy period, it's assumed that those controls are very much in place throughout the policy. Now, it's not. There is a bit of a conception that insurers are always trying to find a way out. I say the vast majority of insurance companies pay the claims. It is more often the case that when claims are denied, it's those very significant material facts that are omitted. A big example being in the US with Travelers Insurance Company. A company just outright said they had MFA when there was evidence of them never having it at all. So it's more so in those instances that we'd be more concerned about.
And how long would the process of underwriting a policy take?
So it typically doesn't take long. I mean, it depends how mature the cybersecurity controls are to get into that position of insurability. But no, I mean, if a company is, within reach of checking off the boxes on MFA, for example, we'd be able to secure a policy within the next few days.
Okay. Any questions from the audience? Okay, Max, I have a question here around the incident response coverage. How can you give us a little bit more detail about how that works and what might be provided, what might be covered? I think, if I'm not mistaken, you might have mentioned that there are a number of professionals that you may engage and have on call in the event of a security breach or whatever. Is that exactly how it works? Can you give us some more information on it?
Sure. So as I mentioned, there are sort of different categories of vendors that are included. And usually when we issue the policy, you'll have a list of those companies that can help you through a breach. And, in some cases, these insurance companies have a proprietary smartphone app so that when you do have a breach or a software impairment, whatever it may be, you can start discussing with them immediately. And so this could be, as I said, IT forensics to go in and find out what happened, how it happened, how to get rid of it. That could be data restoration, ransomware negotiators. There are examples of those people here in the Caribbean as well as in the US. PR firms. So there's a list typically of different public relations firms that companies can start talking to. And as I mentioned, that's a very recent and relevant example of when we might need to talk to an expert before communicating with the public. And then credit monitoring firms. So, checking the dark web for any information that shouldn't be out there of the clients.
I'm gonna ask what might be a foolish question. When is the best time for us to get coverage? Should we wait till an event happens, or when is the best time for us to get that coverage?
I have to say right now, I'm not just saying that because it's a product that I represent, but it is very often the case that companies that I've spoken to, or maybe not even spoken to, but it's usually after an event that the conversation very much begins, in that companies have a real incident. They have to pay out of pocket several $100,000 US, and then they come looking for a cyber insurance policy, which would not stop them from being able to get a policy to begin with. But I always like to point out that to get it in place right now is definitely most ideal.
And one final question. I know amongst your Caribbean clients, how, if you can tell us in terms of what percentage of your Caribbean clients are financial institutions?
Financial institutions, I'd say, make up the vast majority of our portfolio right now. I think that's sort of one of two reasons. Financial institutions are typically very good at identifying that they are processing sensitive information. The second reason is that there are different requirements for financial institutions as far as contracts, duty to their customers, and so on. So
seems as though we lost Max for a moment there.
much.
Sorry, we lost you. You lost you for a moment, Max. So you might just need to go back a bit for us.
Sorry about that. I was just explaining that the vast majority of our book is financial institutions. For two reasons: in that financial institutions are very good at understanding the risk involved and the duty to their customers. And the second reason being, contractual requirements and so on. So even outside of our portfolio, I know that a lot of the insurance companies globally, a big part of their book of business is financial institutions.
Okay, fine. Any questions from floor? Any questions online? Have you seen any questions come in online? All right, Max, there are no further questions from this end. We just want to thank you very much for your presentation in terms of cyber insurance, safeguarding your digital assets. Of course, I'm sure that you may get some inquiries from companies, some who are here and some who are not here, as the word spreads about cyber insurance coverage, because I know, for instance, that it is one of those important tools in the whole arsenal of risk mitigation. I'm not a risk specialist, so I wouldn't want to speak out of turn, but I know it is important that we do that coverage. There's one further question. MFA? Oh, there's a question of clarity on what is an NFA.
Sorry, I should have been a little clearer. So MFA is multi-factor authentication. That is that, when you're logging into an account, you need to have that second device or token to prove that you are who you say you are. So, for example, my company is covered by cyber insurance. It's not the case that every time I open my laptop that I have to prove that I have to get that second token. It's more so that I'm opening it, saying logging into Outlook from a web base, so outlook.com, or I'm logging into a new account. And it's examples of that. So, and then of course, privileged accounts would be sort of those heightened escalation or privileges that sort of the IT team have. When they're logging into their accounts, they want to make sure that login is protected by MFA, so the token is sent to the other device.
Okay, thank you very much, Max. Again, thank you for your participation, for sharing the knowledge you've shared with us. And of course, we look forward to meeting you again at another conference of this type. Thank you so much, Max.
Thank you very much.
So we talked about cyber insurance. We talked about cybercrime, the cyber risk landscape. So we're going to have a discussion now on the importance of KYC in AML and how it helps in the prevention of cybercrime. And we have with us Mr. Keith Downer. He's chairman and founder of Venti Global. And Mr. Downer will be discussing the whole question of genuine presence assurance, building customer loyalty and trust to achieve financial viability and profitability, reducing operational risk, creating financial future growth, as well as strengthening digital transformation programs while delivering innovative products and services. Mr. Downer.
Good afternoon, everyone. And thanks for the opportunity to speak with you this afternoon. I recognize that you've got 10 minutes, I think, so I'm going to try to do this as quickly as possible. But I just wanted to comment on insurance. When you buy a car, do you not have insurance for it at the same time? Anyone in the room? All right. So just make sure you get insurance and a comprehensive insurance view on what you're doing when you look at that. What I'm going to talk to you about is Venti, which is also FDIC insured. We do have cyber insurance on this and a comprehensive insurance package around it. So again, I'm just raising that to your attention that for all the businesses and business types that you're looking at, it's a very key part of the process. Risk management, cyber, Venti. Thank you. Venti Global is for everyone. Anyone in the room without their cell phone? Anyone in the room without their cell phone? So technically, I know exactly where each and every one of you is at right now. The cell phone IMEI and the geo positioning of the phone allows me to know that you're specifically sitting in the seat you're in, not in the seat of your neighbor, but exactly where you are. And most of you are never more than 5 feet away from your cell phone, even when you're sleeping. So we use a lot of the technology in the cell phone to help with cybersecurity. The phone itself does the biotechnology, both in your finger and pictures. The IMEI capability within the phone allows me to tell that the phone was issued by a particular telecommunications provider and a hardware supplier. And the geopositioning on the phone allows me to know that you are not going to try to open a wallet in Barbados from Saudi Arabia. So I'm using the information of you, the client, to help secure the platform at all times. At sign up, for every single transaction you do, I record exactly where you were standing when you did it. It's not preventative in complete situations, but it does help me to mitigate at all given points in time what you're doing. So basically what we have done is taken everything that is in your wallet and put it on the phone. Every card, every device, all your IDs are all stored on the phone. You can buy insurance from the platform. You can move money around all the bank accounts from the platform. And the key piece here is we hold no funds. All of the monies are held by a brick and mortar bank. JP Morgan manages it globally. And in Barbados, there's a bank that I won't announce at this point in time who will do Barbados currency. So the facilitation of movement across funds, if you're a CIBC holder today, you can send funds to a CIBC member immediately. With Venti, if you're a CIBC holder, you can send it to Barclays, Republic, Royal Bank. You can send it to anyone standing right in front of you who's a Venti holder. But what this does to help you, thank you, is to make sure that you have access to and the ability to operate everywhere and anywhere. So all the non-bank community of Barbados, all of the people, individuals who are selling services on the beach, the coconut vendors along the highway, credit union members across Barbados, everybody in tourism, everybody within the the realm of the service industries. I think Dr. Hines, I think I need to refer to her as now, is one of the test cases we have out there where she's able to pre-purchase or have her services be paid for before she performs internationally. The key here is that you're now holding all of this capability in your hand, and you as the individual is being taken care of. And we're protecting it because we're using a lot more data in real time. So this slide is showing you that with the phone, I know all the other Venti users near you. I can point you to an ATM where you can get cash from based on your geographic position with the phone. We allow you to do deposits through the existing banks. But most importantly is this information is what we're using to help protect the cyber situation around you, to try to make sure that at any given point in time, somebody else is not trying to use your account or hack your account for any other purposes. The other piece that is very important on this slide is the fact that you can send funds to anyone and the recipient is also under the same level of scrutiny. So we're validating who that person is, where they are, and what they're doing as the transaction is occurring, transaction by transaction. Venti is not creating anything new. We're using all of the existing capabilities that are available today. So in the US, you can go into any Chase branch, any Bank of America branch, any Western Union branch and transact on the existing capabilities of the branches. You can use any existing ATMs. Your payroll can be deposited directly to the account. And just so you understand, for those of the bankers in the room, it's a ledger transaction. The deposit is sitting in a ledger at JP Morgan. And when it flips between you and your employer, it's a ledger transaction that's moving it internally in the bank. And you have access to all the funds to do what you need to do. So the security from an FDIC insurance perspective, the backend capabilities of the existing banks and what they're doing, double factor authentication, et cetera, is all being protected and leveraged in the capability on the platform, giving you access to Apple Pay, Google Pay, Venmo, and everything else that you would want to use on a normal basis. This slide has a lot of activity on it, and I won't speak to them in detail, but the point that I'm trying to make here is that for you as a user, for you as the individual, you have full function capabilities for finance and insurance that is protecting you at any given point in time. And the geo positioning and the bio positioning of the phone and the capabilities are part of the core part of what we use to help to protect you. It's for everyone. So everyone who does not have an existing banking relationship now has the ability to do that, but that brings more banking services to the financial institutions and also brings microeconomic capabilities for the central bank. Last but not least, I will comment on the fact that it's global. We are following everything that is restricted by the regulatory authorities around the globe. So Russia's off of that. The whole Israeli-Palestine conflict environment is now restricted. And those restrictions happen as they're released to Thomson Reuters Clear ID. Thank you. Take a few questions before I don't think I was that good, but thank you. Yes, ma'am.
I was just wondering, what's your penetration rate like here in the region?
All credit union members. Very shortly, all of you in the room who are credit union members will have access to that. For Barbados, for example, there are 18 countries across the Caribbean Association of Confederation of Credit Unions, and they're all going to be going forward on this process.
Good afternoon.
Good afternoon.
So a lot of the presentation focused on the unbanked and underbanked. Could you give us a little bit more information on what the benefit would be for somebody who is already sufficiently banked? Why choose you?
Fantastic question. Thank you. I should send you a check for that one. So for the people who are banked, most of you are restricted to the financial institution to which you currently today get your services from. Or if you're across multiple institutions, you have quite a bit of manual work to move between one and the other. For those people who are banked, you're not becoming your own central banker. You can move funds between institutions, across credit cards, across debit cards, and you also have the ability to do remote check deposit of any checks for any institutions from the platform itself. Across countries as well. So for the banked, you're your own central banker. Yes, ma'am.
Yes, as Kim said, you focus a lot on the Venti product, but in using this system, where does KYC then fall within the anti-money laundering framework?
Oh, sorry, I thought so I use the Venti product to demonstrate what that is. So
Okay.
for KYC, right, we KYC every single individual onboarding onto the platform.
So then you streamline everything.
Correct. So there are a couple of ways we KYC, right? So you're coming into the platform, and when you put your information onto the platform or we load you onto the platform, we check and verify against the telephone company that the phone is being used with, who you are, if that address associates with you, your driver's license or your Barbados passport, whichever one it is you're using. We also look to verify the address associated with utility constructs against that, right? So the KYC construct that you do today in the bank, which is pretty manual, we've automated a lot of that to be able to do that. The new Barbados ID cards are phenomenal from that perspective as well, right? So I can actually tell who you are and make sure that you're doing it from Barbados and you're using a device that belongs to you. And I can coordinate a lot of that information to sort of verify who you are from a KYC perspective.
Okay.
From an anti-money laundering perspective, I restrict the number of transactions you can do, how big they are, et cetera, based on behaviors, right? So that's how I tie KYC and AML together.
Got it.
And from a fraud perspective, I look to see who you're sending the money to, when you're sending it, how often you're sending it. So if you're a guy on the beach who never had a bank account before, and all of a sudden you start sending $500 transactions, the second one gets stopped.
Got you. Then who regulates you guys in this process?
Domestically or internationally?
Yeah.
Good question. FDIC in the US, the SEC in the US, here in Barbados, FSC.
Okay.
And the central bank as well.
Okay. All right. Thank you.
So I just have two quick questions. One, how does the system function when the your GPS location is not activated? One. Two, you mentioned having accessibility to telephone companies and so forth. So how are you managing data privacy obligations? Because then I would imagine you'll be a controller in that context. And those institutions are also controllers. So you would need my permission in order to have access to that information. How do you actually manage that data privacy obligation under the legislation? At least I'm just going to say for Barbados, I'm not going to try to go across jurisdiction or anything like that, but just at least within Barbados.
So when the GPS is off, the IMEI always communicates back to the mobile data spot that it's connected to at all times. Otherwise, you can't make telephone calls. So I'm really dependent on the IMEI, which is what I commented on, right? If you change phones, you go through double factor authentication, et cetera, to verify that it's you who's got a new phone. And we can connect that up as well. That data is controlled by the telephone company. So we're just leveraging that information. That data, the IMEI data, telecommunications, is controlled by the telephone company. I don't control it. So we're just leveraging that to make sure that the phone that the telephone company is telling me that belongs to you, sitting in that seat, I'm leveraging that data to make sure that it is you. Because when I ask them for this IMEI information, they will just confirm yes or no. They don't actually send me your data.
I've got a question for you in terms of how do we sign up for this? Is there a sign up process?
Yeah, the credit unions, through your credit union. We have it's literally through the credit unions. You'll get a lot of letters coming out starting as early as this week. I think December is the big thing on it. In closing, what I would say is all we have done is taken everything that exists today and try to incorporate it together to make it a lot more intense. So for all the people who are scared in the room, your information is already public. I showed it to you on the screens. I see some faces looking, where did you get that from? Well, there's nothing that your phone does I'm doing differently with it. And it's all public already. Thanks, everyone.
Very interesting. Very, very interesting product, and it's amazing how the technology is being utilized. You know, one of the questions we probably should have asked Mr. Downer is how that information is protected. That's one of the key questions we should have asked. We should have asked him. So, Mr. Downer, if you care to please, how is that information protected?
I think that's the question that was posed on this side of the table as well. But there are two pieces. One is that protection information currently belongs to you. I think earlier on in the presentations, people were talking about most of the violations happen because of user errors. But that data is actually your phone that you have on the table right now in front of you. What you do with it is the issue right there. Secondly, we're not taking control of anything. It's a validation flag, right? Yes or no. So if I send to the telephone company and ask, is Kathleen Mosley this person? They say yes or no. So I don't actually have anything other than what you have sent to me at any given point in time, and that's intentional. Yes. She looks panicked.
Okay, so if everything is controlled, good afternoon. If
Good
everything
afternoon.
is controlled by the device, if someone steals my device, what are your
There you
backup
go.
securities in terms of protecting me? So how do I log into your system? Is someone, if suppose I say, okay, phone, Google, remember the password for this so that I can get in easily because I have a million passwords. I need to know what happens then. Can someone now go onto this platform and transfer my money from one place to the next?
I think that's a valid question, and I appreciate your fear. So a couple things. One, for every transaction, remember I said we do the KYC AML test on it, right? So every time you ask to move funds on the platform, it asks you to verify either via a PIN or your biotechnology to do that every single time. Okay. Secondly, if your phone gets stolen, you can use a separate device and lock the account, shut it, close it, or otherwise. If you report to us that it is stolen, it's also disabled. And then the third layer on that is that at any given point in time that device is not in your possession and is taken by somebody else, you have a behavioral pattern that we already know about. So if there are two transactions that occur after that we're not familiar from your behavior, I'm not going to use the word AI, but if it's not a pattern that looks like yours, we stop them. We'll reach out to you for that. So there are 3 layers of protection for that. Thank you.
Thank you for coming back and answering those particular questions. Hopefully you're a lot more comfortable, a little bit more comfortable based on the answers that were given. I think The interesting thing is that Mr. Downer said it's going to be introduced via the credit unions. So we'll need to see basically how that goes, what the take-up is like. So we have to see where we can get that critical mass and see how it can take off. Because you know, as Barbadians, we tend to be very conservative about these things. And I would believe that with all this talk about AI and the negative use of AI and what of these new emerging technologies, we'd be very skeptical before we take on board some of these technologies. But I think we would probably need to do our own personal risk assessments and weigh the benefits against the risk, and then make our decisions based on the outcome. So Mr. Downer, thank you very much again for that interesting session. Thank you very much. So now we move on to, just 1 second. I just want to make sure I'm not jumping ahead of myself. Right. So now we move on to future-proofing compliance for designated non-financial businesses and professionals. And to present on that is Kimberly Knight, attorney at law and head of the anti-money laundering compliance at George Walton Payne. And Kimberly will talk to us a little bit about the legal and regulatory obligations of the DNFBs, creating robust strategies for managing AML and other risks in a digital economy, leveraging technology to manage risk from micro, medium, and small DNFBPs. Kimberly Knight.
Good evening, all. To all who have come before me, thank you for already establishing protocol. Today, I aim to talk to you about future-proofing compliance for designated non-financial entities and professionals, or DNFPs, as I will call them for short. In so doing, we will briefly explore the legal and regulatory obligations of DNFPs, creating robust strategies and leveraging technology to manage these risks from micro, small, and medium DNFPs. In considering the legal and regulatory obligations in Barbados, we look to a synergistic set of legislation, most notably the Anti-Money Laundering and Financing of Terrorism Prevention and Control Act as amended. As you'll see, there are quite a few others. You have anti-terrorism, companies, charities, several. So who are DNFPs? Often referred to as gatekeepers, we can either block or facilitate the entry of illegitimate money into the financial system. So that's going to be your real estate agents, dealers in precious metals and stones, attorneys at law, accountants, trust and corporate services providers, and operators of gaming institutions. Flagged activity in the Act relate to property or financial transactions, financial management, and dealings with corporations and trusts. The Act imposes an exhaustive set of obligations for customer identity verification. You've got determination of who is the ultimate customer or the beneficial owner, ongoing transaction monitoring. You've got compliance with all regulatory guidelines, knowing when to conduct simplified and enhanced due diligence, maintaining business and identity records for 5 years, policy creation, maintenance and auditing, establishment of organizational anti-money laundering posts, employee training, reporting suspicious transactions, and in some cases, foreign currency transactions over a certain threshold, and general compliance with all guidelines, directives, and requirements, and sharing information with the compliance unit. You've also got to submit to regulatory examinations, and you have to register as a DNFP. So these obligations are mandatory and underpinned by heavy sanctions, both pecuniary from $5,000 to $200,000, and non-pecuniary, such as freezing of bank accounts and, in some cases, criminal convictions. On the subject of strategy, I recall that I was once asked by a colleague in utter frustration, isn't money laundering just getting dirty money into a bank? Why do we have to do all of this foolishness? So after I clearly explained the stages of money laundering to my colleague, he seemed to accept the need for the controls, but he accepted it grudgingly. So robust risk strategies start with a willingness to engage and to be engaged, but it also requires a deep and clear understanding of the foundation principles. So let's start cornerstones. What are the risks inherent to your industry? How is your business constituted, and what is the associated risk? So in so determining, you have to ask, who are your clients? Do you work with politically exposed persons? Are your clients the end user or ultimate beneficiary? Are there many trusts, corporate entities, or other legal persons? Are they local or are they international? What types of transactions do you engage in? Do you move large amounts of money for clients? Do you do local or cross-border transactions? If cross-border, where are your clients from? Are they from a jurisdiction with a good AML practices or shady AML practices? And when you put those things together, that's pretty much your risk assessment. The next is to figure out what are your regulatory obligations and international best practices. And then having assessed your risk, you're now working on how to craft a policy which efficiently manages the AML and other inherent risks. As a lawyer, I will tell you, a good precedent is your best friend here. So when drafting, start by making sure that your obligations are dealt with. And then you can also look to the guidelines that are issued by your regulator to help. Then they will help you fill in any blanks. And then you need to supplement your policy if necessary to deal with your inherent risks and the risks and inherent and international best practices. Once you create, test, and implement, you then have to determine, can you do this? So the DNFB has to determine whether they have the resources available to handle this strategizing in-house or whether you need to look to outsource. In answering this question, it requires an institutional honesty that it takes some DNFBs years to acquire. Micro, small, and some medium providers are accustomed to one or a few persons operating in multiple roles out of financial necessity. And this means that the strategy gets lost in the shuffle of fee-earning activities. As a solution, technology. Technology can help to improve both the quality and efficiency of AML services. The technology is on a spectrum, so it goes from basic, like the use of an Excel spreadsheet or a Google search even, to advanced solutions like using a comprehensive AML management software. So you have tools that help to optimize. They can help you with compiling customer and transactional data, automating customer due diligence, watch list and sanction screenings, organizational training, regulatory updates, data analysis, particularly with recent advancements in AI and machine learning. You can take a lot of data and get really quick and for the most part, accurate outputs. You can automate your document and report generation, and your anti-money laundering policy can be created. So we've already discussed to some extent AI, and I feel confident that you're aware of some of the potential benefits and drawbacks. So in the interest of time, I'll just make brief mention. AI can assist in making compliance for DNFBs more effective by automating your repetitive and your very time-consuming tasks. It can make you more flexible because then you're more easily able to change. When the environment changes, then you too can change. But we also have to be cautious because we have to balance the risks being your privacy and other and your client rights, and also this optimization that's in process. But if you're interested in reading more about this, you can look to the Wolfberg principles on machine learning and the opportunities and challenges of new technology published by the FATF. So technology which facilitates compliance is also called RegTech. And RegTech is one of the fastest growing tech industries and is still largely untapped. The RegTech industry is expected to be valued at 8.4 billion by 2028. And there are a few larger names that have penetrated the world market, such as Sanction Scanner, Refinitiv, World Check, LexisNexis, Vespia, and others. And the list will grow. But what's notably missing is a Caribbean solution, which helps us to leverage both global access, but also local access to databases, particularly in fields such as fintech and other digital spaces. So in conclusion, micro, small, and medium DNFBs are always almost resource scarce, and efficiency must be a primary consideration. The concepts underpinning AML compliance can appear complex and daunting at first, as it is outside of our core competencies. And this will have an impact on the way in which regulators treat with us. So sometimes you have to give us a little grace and start our training from a more basic level. Don't assume that people have that foundation knowledge. So the cornerstones of a risk management strategy is to, one, understand the risk, determine the regulatory and best practices, prepare a policy and mitigation, and determine as early as possible whether the organization has the requisite resources. Technology can help the NFBs bear all of these burdens if we will just use it efficiently. Thank you for your attention, and I'll now take all of your questions. So no questions? I'll take that as I did a good job. All right, thank you.
I have one.
I mean, that was an exceedingly comprehensive presentation, I must say. So I'm a little bit pressed to ask a question, but the question I will have for you is that you've described that in particularly attorneys, they're small outfits and so forth. You did mention that there's some sort of help that they can seek.
Right.
What would that help be in order for them to get, because they might not have the skill set, might not have started training. So what options are available to them to get their framework in order?
So I'll tell you how our story went. At a meeting, we realized that we had to, this is like some years ago, we realized that we had to deal with this AML thing. It's a whole bunch of attorneys in the room and nobody really knows about it. So they say, Kim, you're gonna be the AML person. So I said, okay, because I'm thinking, how hard could it be? So it took 3 attorneys. We sat down and we had to painstakingly go through everything and to write the policy and all those things. I will tell you, the tools that we have now, so just to test, I went on ChatGPT like 2 days before this presentation and I said, write me a sample AML policy for a law firm. And I put in our specifics, how many lawyers, etc. The output was useful. It would have saved us months. It would have saved us months and it would have saved us a bunch of money when you consider the opportunity cost that taking those 3 lawyers away to draft this policy. So go to ChatGPT, play with it, ask it questions. I promise you'll get good answers. Not completely on point, but you'll get something that you can at least start to work with. I would say, find out who your regulator is, call them, become very familiar. Mr. Shepherd, they're in here somewhere. But so you call them and you ask them questions. So one of the questions that I'm gonna know to go to the legislation first, but you will not. Call them and ask them, what is the legislation that you need to go to? Take a read through, at least try to get a basic understanding and then try to understand the principles. Most of the time you'll have guidelines issued. Go on, there's so much information on Google. It's not far. So just avail yourself of all available resources. And if all else fails, call your regulator, put them to work, make them tired of hearing you. Yes, outsourcing is an option, but that of course depends on your resources. So one of the things that I would tell you to assess, it might seem expensive upfront to outsource, but it is usually cheaper because that opportunity cost of having to take somebody away from doing your accounting or doing your core work to learn this and do this. I'm a nerd, I like learning, but somebody else might not. So outsource it if you can afford it. That's it. Oh, there's no ignorance because willful blindness is a thing. So if you choose not to learn, you are just as bad as the person who deliberately does it. No, sir, not an excuse at all. Uh-oh, this is one of my regulators.
So that's what I was just coming to say, that if anyone has any questions, the compliance unit is in the house, or you can contact us 535-7600.
Boom. Is that it for me? No, it's nah, that was my people. No, my only other comment would be grace, right? So I just explained to you that in most instances, DNFBs have not in most instances, the legislation does not differentiate between DNFBs and financial institutions. Every obligation that a bank has, a bank like CIBC with a whole bunch of resources, we have the very same obligations for an accountant who's just running a little firm and doing a little bit of things on his side. So sometimes grace, bearing with us a little bit when sometimes it takes us a little while, and bringing your training all the way down to the ground floor. I had gone to like 3 or 4 different training sessions and could not for the life of me understand what a risk-based assessment was, because that was a term that people were using as if everybody knew what it meant, right? So that would be my only other comment. You want me here all evening, don't you?
No. There's not a question. This will be more of a comment to what you said with respect to the use of AI. So I'm a heavy believer of that. And obviously it's going to make life a lot easier for you. As you mentioned, there's ChatGPT, which has 2 versions, a free version and a paid version. Go for the paid version. And then there's
Don't listen to him. Use the free version.
And then there's also Bard by Google that's absolutely free, but you have to bear in mind that with ChatGPT, there's a knowledge limit from 2021, September 2021. Anything after that, it's not going to be able to assist you, but it will be able to give you a pretty decent, as Kimberly mentioned, framework or policy for you. But Bard would be a little bit more current. However, you have to bear in mind, you still have to approach these things with some measure of competency, because it can spit out misinformation in some regards. So you do have to go ahead and double check. And yes, you can make your regulators miserable. There are also consultants who can make use of as well, in order to bolster your framework. So I just wanted to add that in addition to what Ms. Knight presented.
Much obliged.
And a shameless plug for the Barbados Compliance Association as well. We're also there for that assistance as well, because I'm the training chair for that organization. So you have quite a wealth of resources at your fingertips.
And I as well.
Barbados Compliance Association.
Having gone through,
professionals.
Yeah.
Sorry?
Yeah, having gone through the process and getting the knowledge, I'm happy to help anybody navigate the learning curve. I think at the end of my presentation, I had my LinkedIn details. Call me at the office, but not too much. So just reach out, and I'm happy to help anybody navigate, like provide spaces and the places that we were able to get the knowledge and help anybody who wants some help. Oh, sure.
Hi, good afternoon. Apology for my voice. I am not well. I was to be there in person. I am the Chief Compliance Officer for the Compliance Unit. So I just want to put a plug in for the unit as well. The voice. And in terms of, I know some individuals might think that it is for all attorneys or all accountants. There's still specific criteria that will determine if they will fall under being a DNFBP or not. So all of that is in legislation as well. So you need to look at any second schedule look and see if you do any of those activities listed. And if you do, then you would be supervised by us at the compliance unit. If you don't, well, you won't be supervised by us. But we have questionnaires out as well, and we are asking for individuals, even if you don't do it, we still need to gather that information to say, okay, we can verify that these individuals do not participate in any of these activities listed in the second schedule. So y'all can always talk to the rest of staff that is there, and you can always call us at the office, and we're going to have a website launch shortly by the end of the month. So you can always check us online as well. Thank you.
Thank you.
So we want to say thank you to Kimberly Knight, but I guess we also have to say thank you to the compliance unit as well in terms of sharing some of the information with us. So we are a little bit ahead of time. And for the next 5-10 minutes or so, no, 10 minutes more exactly, for the next, sorry, let's been back a minute. For the next 17 minutes between now and 3:30, we're going to be on a break. And I think it was Ian this morning said networking, it's on a networking break. So it means you should get to know those other persons at the other tables that you didn't get to meet this morning. And so we're going to invite you to take that 16-minute break, and we'll be back at 3:30, then to go through our panel discussion. Good afternoon, folks, and welcome back. Mr. Downer, I'm going to invite you to have a seat here on the panel with us.
Hello. Testing.
Okay, so we are back for the panel discussion, the final session on this part of the program, or the penultimate session on this part of the program. And it's going to take the form of a panel discussion, and we will be looking at anti-money laundering, detecting financial crime through transactional monitoring. And here, as part of our team of panelists, which would be led by Ian Morris again, we have Sunita Ransomir, legal advisor, the Caribbean Financial Action Task Force, Cindy Satterfile, General Counsel and Compliance Manager of Sagicor Bank Barbados Limited, and of course, Mr. Keith Downer, co-founder and CEO of My Ready Cash. So we're going to be discussing the whole question of anti-money laundering, detecting financial crime through transactional monitoring. And we'll be taking a look at things such as the AML and financial crime outlook for 2023, reducing risk through real-time detection of suspicious activities, customer risk assessment and scorecarding on a dynamic basis, transaction analysis, and account monitoring. Ian, over to you.
No offense, Mr. Downer, but I will go ladies first. No offense. We're going to start with Sunita. I have a simple question. What are some areas of risk or higher focus areas? And we're looking forward to 2024. Just tell us from your viewpoint, what are the areas of risk that we should really focus on?
Okay, great. So some of the areas of risk that we would like entities to focus on would be, and this is really based on some of the information that we get from our members. So part of our process where we have engagements with our members through our plenary, they do provide us with ideas of what are some of the risks that they're seeing currently, as well as some of the future risks that they're seeing. So we know during COVID, there was this increase in romance scams, a lot of fraudulent scams as well. So there seems to be a continuation of that trend moving into 2024. They've also noticed things such as business email compromises, as well as document fraud and wire transfer fraud. So they have noticed a lot of cyber-related crimes moving into the future. So of course, misuse of digital payments would be some of the items that members would be looking at when it comes to 2024. So we would ask persons to have a understanding of how those crimes may be affecting your organization and what you can do to mitigate against it, as well as the unauthorized debit and credit of transactions in your certain accounts. So those are some of the areas that our members would have highlighted for future consideration in 2024. And I know we were looking at future trends, but I thought it would be really beneficial to also indicate that in November 2023, the FATF did a best practices paper on the illicit financial flows from cyber-enabled fraud. So I do think it would be of benefit to some of the attendees here to have a look of that paper, as well as the Countering Ransomware Financing, which is a report that was also done in March 2023. So I think those two papers would be of great benefit to some of the participants today.
So a further question. This is how you can easily detect financial crime, is you actually monitoring the transactions?
Yeah, it's one of the ways, because remember, let's take a step back, right? Transaction monitoring is part of your customer due diligence. What we want to find out is whether illicit funds are coming in to your regulated financial system. So in order for us to know this, you have to have your customer due diligence. So you need to know who your customer is, you need to know the nature of their business, you need to know their geographic location. You really have to have a good understanding of your customer. That way you know that whatever funds are coming in are either from a legitimate or illegitimate purpose. You can only know this if you know your customer and you monitor their transaction. So you know for a fact, based on your KYC, your customer is employed, their salary is $3,000 every month. That's the amount of money you expect to see on accounts. 1 February 2024, they decide to come and drop in $50,000. You have no idea where this money is coming from. So the only way you'll pick up on this is through your transaction monitoring and knowing who your customer is. So now you have this $50,000 deposit, you have no clue. So you're going to ask your customer where it comes from, and then you can file a suspicious transaction report. When that STR goes to your financial intelligence unit, they'll now do their intelligence analysis. And of course, based on that, it may go to your law enforcement for further investigation. So that's really the train of how your transaction monitoring goes through the process to be able to investigate and detect and prosecute money laundering.
Thank you, thank you.
So maybe I can add to some of the things that Sunita has indicated, which I fundamentally agree with. I think maybe to start with one of your earlier questions in terms of what we also as practitioners see as risks going forward. Cyber risks definitely is one of them. Cybersecurity is something to definitely keep an eye on, because as we become more digital in our manner of transactions and the way we do business, we have to keep an eye on the cyber, right? The ransomware, incident response, all of those things that was spoken about earlier today are very key. Vulnerability and penetration testing. These are things that your organizations need to be doing as you become more digital as well. So that is something we also want to keep our eye on. In addition to the rise, I think, of fintechs. And, you know, I think we met with fintech earlier. I don't want to speak out of turn and categorizing them as that. But certainly a fintech is an industry that is on the rise, where they provide financial and different types of technology tools available to you to allow you to access the system. But they themselves are not licensed as banks. So they rely on regulated financial institutions to complete the transactions on their behalf. So they're not exactly regulated in that way by a central bank to be licensed as a bank would. For example, Sagicor Bank is licensed by the Central Bank of Barbados, but there may be fintechs coming out there that are viewed as what we call unregulated or unlicensed
financial institutions. And there's a growing, increasing number of them because people are going into that market and creating those very flexible tools for other persons to gain access to the financial system, but they cannot complete the transaction on their own. They need to have a relationship with a financial institution. So we're going to see a rise in fintechs, and also I think sanctions, right? Economic sanctions, not sanctions as penalties. Those will always be there, but the economic sanctions. We're seeing more and more, and of course you're seeing the wars in the world today, Russia's invasion on Ukraine, the war between Israel and Hamas. More and more we're seeing increasing sanctions by the United States on individuals associated with these wars. And we have to keep an eye on that as financial institutions. Ensure that our screening tools have these names in our screening through OFAC and other relevant lists, United Nations Security Council lists, and there are many others that you would want to ensure that you have in your organization that you are screening against. And I would always advise in an automated way, because transactions are moving so quickly in the digital world. To keep up with that, you need automated tools to be able to screen and monitor. So with the increasing sanctions, we have to be able to keep up. And what's even becoming more prevalent is those export controls. Now you might say, oh my gosh, export controls and banking and finance, what do the two have to do with each other? Well, it's becoming more and more of something that financial institutions have to be on top of. Sounds like football in the background, which I have no problem with at all. But in terms of the financial tools, you have to be able to also look at those export controls that are issued by the United States Business Institute. Forget the full acronym, sorry, I will find that for you later. But they publish a number of export controls. And when you are doing trade finance, if your institution does those kinds of areas of business for your customers, you have to be able to know who your customers are trading with cross-border, which jurisdictions. Are they doing transactions with high-risk jurisdictions? Being able to look at those invoices and bills of lading, it's that level of detail that banks have to get into in terms of the increasing sanctions that are being imposed. So I wanted to comment in terms of risks that we are seeing as practitioners as well in the industry. And also, not so you hear my voice constantly here this afternoon, but in terms of transaction monitoring, yes, I agree with Sunita. It starts with building a profile about that customer. From the time you step foot, if it's a brick and mortar, or in our case, you go onto our app and download it, and go on to put in your ID to authenticate on the app, and you do your selfie, right? Which is completely different with Sagicor Bank. We're not brick and mortar. You do everything digitally with us to onboard. And your proof of address, that starts to build a profile about you. So we start to get knowing you, knowing the customer, right? KYC at that stage. And then we do risk profiling in terms of what risk level are you, right? And then from these things, that information feeds into transaction monitoring, which I'm sure we'll talk about a little bit more. But I just wanted to leverage off of what Sunita indicated and sort of give my practitioner perspective.
Thank you.
And if I may
just a minute, just for those of you who are probably under 40, there was a time when, as a business, you wanted to purchase goods from certain territories. No bank in Barbados could touch you, couldn't offer you that service. You couldn't do business with North Korea. You couldn't do business with Cuba. Iraq and Iran were persona non grata. You just simply could not do transactions with them. That is monitoring in and of itself, but the technology was not there. It was going and looking into a good old-fashioned book, something that the teenagers today really don't have a clue about. Everything must be electronic. So no, having just added on to what the ladies have said, not being offensive to anybody under the age of 40, but that's what it was. I'm going to shift now to Keith Downer, who is co-founder and CEO of My Ready Cash. So I have to chat to him about customer risk assessment and scorecarding on a dynamic basis. Keith, over to you.
Thank you. If I may, first of all, say I completely agree with everything the ladies have said. That is critically important. Secondarily, Sagicor's approach of starting digitally with your picture, I think I commented earlier about biotechnology. They're using the biotechnology on the phone or on your computer to get started with that relationship of know your customer. That, again, is an excellent way of looking forward in what we're trying to get done here today on a daily basis. Some considerations that you really have to think about from a risk perspective is that we have a lot of movement of people. So we talk about what's happening in the Israeli war, we're talking about happening in Ukraine, but right here in the region, we have Venezuela threatening to take over half of Guyana. And we have a lot of Venezuelans moving through Trinidad and a lot of Venezuelans moving to Barbados. How are you opening bank accounts for these people? How are you helping them to transact? So we have the issue at home in Barbados today. The books were great when we were all going to school, but they don't really work real time in what's happening in what we're looking at today. So if we're not digitizing this and trying to make sure we're leveraging what capabilities are out there, Barbados is going to be having tremendous difficulties. From a transaction monitoring perspective, each transaction that somebody is trying to conduct will have to be looked at on the originator, the person starting the transaction, and the recipient, the person who you're trying to send or do business with. For the fintechs who have gone the extra mile, like ourselves, to get FDIC insurance, get government regulation, work with the central banks and the regulators in the region, we're taking on the additional risk of trying to make sure that we look more like a bank, behave more like a bank, and conduct ourselves more like a bank, and not be an FTX or something else out there that is collapsing. But banks will have to also digitize and move forward with this. It was a great presentation earlier on compliance and AML and the documentation and the processes and all of that, which is fantastic. And that is a requirement. But the reality of that is you need to inspect what you expect. So after you have written the policies down and the regulators have agreed on them, you need to inspect that those policies are actually being executed upon. And I think Sagicor mentioned here about using some of this from a technological perspective, having technologies help you to make sure that your staff are following those transactions on that platform. So from a risk perspective, going forward, looking forward, we have movement of people globally. We have new cultures being blended and melded across the region. And they have a desire to help support their home country as well. Venezuela is on the restricted list. We have real-time changing and movement. The leadership of Israel is now on a restricted list. If you want to send Netanyahu a donation, you can get yourself in trouble. So those things are happening dynamically as we speak about them. You need to make sure that you're doing that from a dynamic perspective. The beginning of this conversation was about knowing your customer, building that relationship and understanding them. But then when things change on that customer, not necessarily from their behavior, but from the restrictions list or the sanctions list perspective, you also have to make sure that you're managing that. So I just want to connect some dots. Technology is your best friend when used correctly. Inspect what you expect, technologically and human, and make sure that you're staying abreast of the changes occurring both domestically and internationally. Yes, the US is putting sanctions on everybody, but we have issues right here at home. I'm talking about Barbados. How are we going to support the influx of this new generation of people? In 1989, I think I went to UE and graduated around that time. I don't remember seeing 5 Muslims in Barbados. I saw an entire church yesterday. How are you supporting each group, each territory, each individual across Barbados? Not to offend anybody, the over 40s, talking to the under 40s.
All right, thanks for that update, Keith. What I want to do now is to ask a very simple question. How many persons here in the audience are owners of businesses, as in a sole practitionership for an attorney, or a sole practitionership for an accountant? Just that show by raise of hands. You don't have to stand up. All right, so you need to have a word with Kimberly. I'm not giving advertisement. What I'm saying is it is better to be informed than to be penalized. Get what I'm saying? Because if you don't have it in your office already, there are some things that you need to update. From where I sat for the last 14 years of my employment career, sole practitioners were my biggest problem. They didn't keep adequate financial records. So when they came to me and said, listen, I need to pay X, Y, or Z. And I said, so what happened to the payment? You told me you had a contract happening. Oh, well, they haven't paid me yet. But I'm supposed to put money on your account or put an accommodation facility on your account so you can write checks for which you have no money. And I said to him, but that is a crime. If you write in checks you ain't got no money, that's a crime. Got vexed with me, wanted to close his account. Unfortunately, he didn't, because he would just transfer the problem somewhere else. Having said that, I want to know if anyone has any questions about anything that they've heard from any of the 3 presenters. Anything? All is fine and dandy?
You scared everyone.
Me? Can't scare anybody.
Well, Ian, I'm thinking maybe I can help you with scaring everyone, because of course, yes, lawyers, accountants, real estate agents, those are some of, from Kim's presentation, you would have noticed some of the DNFBPs that fall within the standards that have to apply AML-CFT compliance requirements, which is your CDD, your transaction monitoring, right? So for the lawyers, there's no need to be afraid. It's certain activities that lawyers will carry. So those who engage in escrow services, who collect funds. So maybe I can give an example of why lawyers under that activity is considered for AML-CFT. So you're a lawyer, you're conducting an escrow service real estate transaction for your clients. You are now going to hold $500,000 for your client in escrow for purchase of a $20 million property, right? You go to the bank, you give them the money, be like, I'm holding this money in escrow. You have no KYC on your client. You know nothing about them. This is someone who just comes into your office. I want to purchase this $20 million property. Here is $500,000 in cash, a nice big multiple duffel bags. And you now go as a lawyer to the bank to now deposit these funds. You don't know who your client is, right? You have no idea if the funds are legitimate or not. So let's say your bank does accept this $500,000. It now goes into your financial system. 2 weeks after, your client now comes back and say, you know what, I no longer want to carry out this real estate transaction. I want back my $500,000. So you go to the bank, you take out your $500,000 that you've now laundered through your financial system. So it's now clean funds. It went into the bank, it got clean. And now this client now has $500,000 in clean funds to go and do whatever. Because you didn't do your customer due diligence. You have no idea where the funds came from. You didn't know your customer, you just took it, right? So that's one of the biggest rationales for why we have attorneys who conduct certain activities. So it's not all attorneys. So we know some attorneys solely provide legal advice. They don't engage in transactions. such as holding money in escrow. So it's only a certain sector of your lawyers. So if you know you are an attorney who engages in escrow services, you are one of those attorneys who now have to comply with your AML CFT compliance. So I know when Kim was presenting, I believe it was Barbados's compliance unit came on, and it did indicate that there are certain activities when you look at lawyers and you look at accountants, only those, if you conduct those activities, are you really or required to comply. So hopefully maybe some of the lawyers who are afraid just now from when Ian spoke, if you engage in any one of those activities, please check in. She said she will help you all. And ChatGPT is always available to help you with AML CFT compliance programs. Yeah.
Thank you. That's a real help for some of the budding attorneys I see sitting in the audience. Those with whom I travel to that place called Trinidad. So I know who that person specifically knows who I'm talking about. I go on to ask if there are any other questions, anything that is mysterious, confusing, even if it's only the acronyms that we have used up here. Please don't hesitate to say something, because it is difficult to say, I understand, but then when you are in the field, show that you really did not understand. So everybody's all right?
There's a question over there.
A question? I can't see a hand. Oh.
Right now, there are several firms I know and attorneys who have just said, I ain't got the time to do this. I want to automate. And so sometimes when we're looking at the different software packages and other things, we can't tell which one is best. And I know you're probably not supposed to plug anyone, but in your experience, which one is most applicable to the Caribbean? Everybody has like a little page or something that speaks to Barbados and the Caribbean, but it's always very, very general. So it brings me no comfort. So if you have a solution, maybe a budding Caribbean solution or something and you'd like to share, I'd be so grateful.
That's such a good point, because in all transaction monitoring tools, the vendors do not come from the Caribbean. They are generally US-based, UK-based, and they will plug all the international lists that need to be screened against. But when you ask about, well, do you have the local domestic lists as well? They'll say, well, they'll have whatever is available on open source information. So they don't really always dedicate the time and energy towards building PEP lists, for example, from the Caribbean. So sometimes even in our monitoring tool, even though we have a very good one, and I'm not going to plug it because there are about 10 tools out there, 10 vendors that are very good, but they're not committed to the Caribbean. And even the one that we use, I really do like, because it gives me control as the person who's using the tool, as many other tools do not. If you want to tweak it and alter those alerts, because you guys will know that once you do transaction monitoring, you're generating hundreds of alerts every day, and most of them end up being false. And you have your teams looking at them every day with their eyes sunken by the end of 4 o'clock, aching to get out of the room because they're staring at multiple false positives. So you want a tool that gives you the control. And we can talk about what we use after privately, so I can let you know what that looks like. All right, but I don't want to make any plugs here for any particular vendor. But to your point about whether there are the local names, you have to build sometimes your own lists and create your own watch lists that you upload into your system based on your knowledge, because they will only have so much. There have been many occasions where we have the onboarding process. All of our persons who are being onboarded are screened at onboarding through the tool, and we get an alert if it is that you may be adverse media, or you may be a PEP, or you may be a potential match to a sanctioned person, and you have to stop and take a look at that person further based on their indicia, their date of birth, sometimes facial, the picture is the only thing that helps, their full name, their address, and so on, to assess whether it's a true match or not. But many times, the system may not pick up on a local person, And it is local knowledge that helps the detection process, where we would say, well, wait a minute, based on the names that we've seen onboarded today, we know that person. That person is actually a PEP working at so and so and so. And then we're able to treat with it. So there's no perfect solution for the Caribbean right now, unfortunately. And you're going to have an approach where whatever vendor you're utilizing, you will have to be on the lookout your own self by your own searching online or your own knowledge to build your lists as well that can be uploaded into the system.
But as
I think that's a very important point. Very, very, very important point. The PEP list for the Caribbean is not maintained by anyone. The list that of people that you're supposed to be looking at is not necessarily maintained. So it's really important that even though you're a lawyer or the example you're using, you don't get the excuse of I don't have time for that. You actually have to do some work on it. Sorry.
Agreed. No need to apologize. I absolutely agree.
Yeah.
What I'd like to ask though is data. And that for me tends to be the biggest challenge. We're so segmented in the Caribbean that sometimes it's very, very hard to get the list. I mean, you could find things online and try to put it together yourself, but it's not always up to date because everybody doesn't have the same resources. And then sometimes you want data from the regulators. So they will be the ones that will get the suspicious transaction reports. They're doing the investigations, etc. But sometimes because they're so under-resourced, they can't get the data back out in any timely manner either. So that's one of the challenges that I would like to highlight. And for the people who have some power, I'd be very grateful if, we could put some resources into solving some of those issues, making the stuff more accessible.
Okay, if I may suggest. Yeah. If I may suggest, there are tools that are set up as security background investigations. So if you want to visit the White House or something like that, they'd run a background investigation on you to figure out who you're associated with and stuff like that. Those tools are not extremely expensive if you're just using open source. And an email address, a cell phone number is a good starting point to figure out everyone who's associated with an individual, who you sent your last set of emails to, who you may have sent financial transactions to, etc. And if you started with a list and you just literally, I'm not going to say Google it because that's not really what you're doing, but the cell phone number, the email address, it helps you to see everybody who they're associated with, and you can pick from those associations very quickly if there are any sanctioned individuals or other individuals involved. It's actually available. It can be integrated into most things you're doing, and it helps you to build that list of your own of people who are restricted because of association, because of whatever that looks like. And it's not an expensive solution, but we could talk about it after. I'm not going to plug the software itself here, but it's available to everyone. You can use it in the bank, you can use it in the law firms, you can use it anywhere, and it's not that expensive.
Okay. Much appreciated.
So unfortunately, there is going to be some work to build your own lists. We have, as stakeholders in Trinidad and other Caribbean territories, spoken to various regulators asking them to create these lists. And unfortunately, we have had a response where they have not wanted to take, I don't want to speak for them, but they don't want to create these lists for their own reasons, in terms of perhaps it may not be thorough, or they may feel that they may be held responsible for a name being omitted from that list, or the case may be. So they do kind of give you a little direction though. They will say, well, you can check the Integrity Commission website if there is one in Barbados, and in Trinidad there's one. So they kind of give you a little direction in terms of where you can start looking at the parliamentary websites for lists of names of parliamentarians and so on, where you can actually start building your own list based on those pieces of information and creating your own PEP lists for your internal purposes. And I want to say something, it's not one size fits all. So remember that about transaction monitoring. We talk about automation, and certainly the larger the organization is, you must automate your transaction monitoring because you will need real-time responses to aid you in your monitoring. But if you're a one-man shop, a lawyer who's running their own sole practice, and you have perhaps one person coming in today and another tomorrow, It's quite manageable, isn't it, for you to screen those persons on your own against the OFAC list, which is available on the OFAC website, and the UN security list, which is available on the United Nations website. It is easy for you to actually do that check for yourself. And of course, the domestic list, which is available also on the central bank website. I believe it might be in PDF. We have to get that in Excel, right? That's always an ask. But we can do that manual screening on your own. And of course, ongoing monitoring. Remember that once you onboard somebody to do business with them, it's not just when you said hi, hello, and signed that arrangement, but once you have the relationship with them, every day there should be some check for that name to be plugged through the same process. And why? Because lists are not static. They get updated. And that person who started with you 3 years ago may become either a PEP or a designated person 3 years later. So you have to have some system, and this is where you have to work with technology now to build those lists where they can scrub against. And I mentioned OFAC and United Nations and the Barbados list, domestic lists, because those are the ones and the currencies that we tend to work with. The United States dollars is what I call a vernacular currency. Everyone uses it. So screen against OFAC. United Nations Security Council list contains all the lists of all the terrorists and designated entities that they have to be concerned about on a United Nations level. You screen there, and of course, your domestic list. But if you're dealing in Canadian currency, screen against the Canadian off-sea list, right? So it depends on who you do business with and what currencies you operate against as well. And as I said, it's not one size fit all. Try to get it to fit your type of business.
Thanks very much. Any other questions?
Well, just to add to the conversation about screening, and for the single person just operating by themselves. Yeah, there are risk intelligence vendors that are a little more affordable, and much like everyone else, I wouldn't plug any names right now, but they are more affordable. And you could even do it on like a prepaid basis. You buy credits, and then you could, based on your frequency, you determine how many credits you need. But if you need to get off the ground and then be able to demonstrate that you are doing adequate searches, you can use some keywords, because even within Google, there's an advanced search function that you can make use of. And it's limited, I think, to about 50 criteria. So you will have to do some work still to determine which of those criteria you want to screen against. So the same UN sanctions list, OFAC, OSFI, those lists would be useful. And then you would plug some other keywords like political, don't say PEP, use political or politics, something shorter, so then it would pull that information and you might be able to see the relationship between that search word and the individual or subject that you're trying to screen against. You could get help again from the same AIs to ask, well, provide me a list of 50 search keywords that would aid me in doing screening. But this, mind you, I would still advise that you work towards getting something more robust, because this is fairly manual, but at least it will give you some sort of safeguard, and you'll be able to demonstrate that I'm searching against these keywords to your regulators or your examiners. I'm searching against these keywords against the subject that I'm onboarding and whatnot. And I'm also very glad that you mentioned that it's not static, because I could become a pet tomorrow just by association. So it's not even by your relationship. It could just be by association. I could be classified as a PEP. I could take on a job and become the head of a statutory body that classifies me as a PEP, or classifies the subject as a PEP as well. So they're not static. So it's something that you will have to continuously do on a frequency that I guess you're capable of doing, but the more robust solutions would either do it on a day-to-day basis, or you can set the frequency that you need to cover yourself. So that's just my additional contribution.
Thank you.
Thank you. We still have a few minutes. Are there any other questions or queries or areas of confusion that we need to clarify? And by the way, PEP just means politically exposed person.
Hey, good afternoon. I've always considered the the definition of PEPs, especially in a small society of Barbados, as being unnecessarily broad in that it captures. I was just wondering if the panel had any comment on that. Is that, especially my friend from the Financial Action Task Force, is it their intention? Was it purposely done for it to be that broad so that it captures so many people? Because then for those of us practitioners that actually have to, apply then the enhanced due diligence to these people, you often get lots of pushback. They're literally complaining to your superiors that you are doing. We know the hassle that we get as compliance professionals. And so just wondering if the panel had any comment, if we would consider using your good offices to, I don't know, maybe restrict it, not to make my job easier, but just naturally, because I just really think that it really is coached very broadly. I also know the threshold for reporting suspicious transactions is also one where it's just mere suspicion. And so again, you find that in any one given time, you can have an influx of SDRs going to the FIU. And so I feel it at least merits us to revisit it and look at it just to make sure that it's fit for purpose.
Okay, thanks. So I'll take it. It's two questions, right? So it's you and PEPs. So I think we need to understand that when the standards are drafted, it is a standard that's applicable to all of the jurisdictions across the global network, whether a large jurisdiction or a smaller jurisdiction. When we speak about PEPs, we're really speaking about somebody with a prominent function who would have influence over a jurisdiction. So when we talk about PEPs, you talk about your foreign PEPs, your domestic PEPs. And we're really talking about somebody entrusted with a public function, such as your head of states, and somebody who have influence, right? Because what we're trying to prevent is these persons who have influence using their influence in a manner that they should not be using it. You use your good office the way your good office is meant to be used, and not for any benefit of a friend or a family, but hide money from a kickback for a road paving project you didn't do, right? So those are essentially the basis for why we want to have PEPs included in it. So I'm not too sure what the definition of a PEP is under Barbados law, because of course it's up to the jurisdiction now to define how they wish a PEP to be defined. So what I can just speak to is generally what we consider a PEP, what ought to be in your legislation and who should be covered. So I do understand your concern, but I think when you look at the broader rationale for why we want to have PEPs involved in it and their close associates, it's really to make sure that any form of corruption, any form of kickbacks, these persons, they have prominent functions, and we are aware of their source of funds, and it's not just from illegal activity or kickbacks or anything like that. And in relation to your second question on the STRs, so I would always suggest that your financial institutions and your regulators provide you with guidance on what to look for. So your supervisors are really supposed to give you indicators on what to look for as red flag indicators for money laundering, terrorist financing, because it's not every incident that comes to you ought to have a suspicious transaction report done. You look at the red flag indicators given by your FIU, by your central banks, by any of your other supervisors, and determine whether it falls within, okay, yes, this is a red flag for money laundering. This activity is suspicious. Let me file an STR. So your regulators are really supposed to guide you all and provide guidance on it. So I would suggest that if you still aren't very clear on when to file a suspicious transaction report, I'm quite certain the FIU and any of the other regulators, your central banks, etc., would be more than willing to provide you all with guidance on what to put in, because it's not just about filing an STR. It's not about the quantity. It's really the quality of the STRs that are very important, because you can give me 200 STRs and all of them, there is nothing that I can use to further an investigation. It's really, when it comes to an STR, it's the quality. And in order to have quality STRs, you need to be aware of what you need to put into STR. You need to know what your red flags are. Your frontline staff, they need to know what they are looking for when they have to send this information to their compliance officer, who will now determine whether an STR should be filed. So it's a lot of moving parts, and it really isn't just about the quantity. It really is the sorry, not about the quantity, it's about the quality of the SDRs. And I would always suggest, because that is what your FIU is there for, they are supposed to provide advice, they are supposed to provide you with indicators. So of course, reach out to your FIUs and get the information from them. Yeah.
I think, so I agree with Sunita, but I think your question is so relevant because we get customers, arguing all the time why they're not a PEP. Okay, and usually I would have to say, unfortunately, I'm a lawyer, but they are usually lawyers too. And they hold positions in certain positions of the prominent function of influence. And we looked at the definition, which mimics the FATF's definition. The regulations actually mimic it. And they give examples of, state-owned enterprise, military officials, heads of state, and so on. And they'll say, well, I'm not any of these. And they would highlight it. They would actually go to the law themselves and highlight it and argue it down to the last minute. So it is a practical matter in terms of identifying them. Many times it may be people who are part of associations and they may be doing something in a public sphere, but they themselves don't fit into the definition of a PEP precisely. But they may have some influence because they are dealing with a number of heads of states and they are dealing with politicians on an ongoing basis to get things done. So it then becomes a question, well, then how do you categorize them and how do you risk rate them? And it really becomes a very practical matter. And this is where we need to collaborate more amongst ourselves and with our regulators, which is something I always encourage. Even with the filing of SARS, we did something in Trinidad with the FIU initiated it, where they would have meetings with financial institutions periodically to discuss the quality and quantity of their SARS. And that was so helpful for us to get really to understand when we filed a SAR, what happened to it? Did it end up in a space where it was going to be investigated because our FIUs are administrative? Were they investigated or did they just, not go further? So the quality was discussed. So that's something that we can engage a little bit more with our stakeholders to get that kind of feedback. So we get that clarity. And then just coming back to the PEPs, really it's about now, well, what's the risk your association is going to take with that individual who's fighting it down to the last minute? I'm not a PEP. There are other ways of dealing with it from a risk perspective, in that they may not be fall under the definition strictly, they may be right, but they may be close associate. And then what does that mean? Does that mean that they have highest risk? Or does that mean that they maybe are not low risk, but maybe medium to high, and you will monitor their account accordingly? But maybe you will also apply enhanced due diligence, but perhaps you may not make them fill out, a PEP form to that degree. There may be options that you can explore with the individual in terms of, well, we will still assess the risk that you pose based on your relationships. But I do appreciate that that is a very real issue, that we're dealing with the everyday person out there. They will argue their position.
If I may add to that, not that I'm solving the problem for you, but the PEP situation is a global one. So I did quite a bit of work in Singapore, and the lawyers in Singapore are really, really aggressive on this. And they're very influential as well, and they fall into those categories. So the PEP definition is not controlled domestically. So I don't know that they can make many changes to that for you, but the advice given around analyzing the PEP classification and trying to figure out how the leadership of the bank would like to risk profile those individuals that are borderline, and I'm using that word very carefully, is probably the only exit that you can find, because the definition is standard globally. You can't get around it. You will get sanctioned for it if they catch you on the wrong side of that line. So just be very, very careful with that. And on the transaction monitoring, I have looked at least 5 or 6 different systems globally. It's all about tuning. You will get a lot of false positives coming up. You've got to really, really work at that to try to get the higher quality ones coming through. And just remember that as soon as you think you have it locked down, it's going to change again. So it's an ongoing thing. There's no rest for the wicked on that one.
We gave him more to think about.
Just a quick follow in terms of the technology, because in terms of I think what maybe would be useful is if regulators too as well, because we put in a lot of work for the regulators, right? But be useful in terms of too when we are onboarding these technologies to have make sure you do your due diligence on these companies to ensure that the technology really does what it's supposed to do. Because then you find that they may, be certain loopholes that may come through, and then you find yourself exposed. And so, for instance, I think one of the features that I think will be essential now is in terms of, especially if you have different branches and locations. We know here we have different reporting thresholds for certain transactions, $10,000, but I may go here at Sagicor Bank, go to the one ATM here, and then I deposit, 2,000. I go to another one, I put 5,000, and I go to another one, and I put another 2 and go somewhere else. I put another 3, and I've made in one day I could do a $10,000 transaction, but because I've done it at multiple avenues, one person alone may not be able to pick up on that and identify that. And so then you have, persons going under the radar and somebody possibly laundering large sums of money. And so I'm saying that to say, you have to make sure that these are the reasons why we need technology in that, so that the technology can actually pick up these nuances and pick up these discrepancies for us. Whereas a naked eye, those of us in offices would never be able to detect those kinds of things.
Absolutely.
Yeah, absolutely.
What you're talking about is structuring, right? And at the end of the day, monitoring tools, you have to plug those rules in, right? That would say that, look, if we're seeing an individual, and there are rules that you can create in your monitoring tools for this, that if you're seeing an individual who is depositing within X amount of days, X amount of money, so you give it a time frame and a sum, it triggers an alert. You're able to look at it, whether the deposit is made at an ATM, whether it's made online, however they can make a deposit, the rules should be connected to. And these are things that you have to use technology, because you're quite right. You can't see these things with the naked eye.
Yeah, you wouldn't see those reports for a few days from those different ATMs. So things to consider, right? An individual, I'm just gonna say Sunita, has 5 different accounts, and you want to make sure that Sunita hasn't crossed the threshold across the 5 accounts in any 24-hour period that you're looking at. So you need to make sure that the rules that you're setting up are not just for the exact transaction, but you're actually looking at the people, you're looking at the accounts. So there's a bunch of different things you need to put together. I think, I'm not trying to solve it for you, but I think understanding what the rules need to be to help you would help you to solve that problem much faster. If you try to do that with the naked eye, I can guarantee you will get locked up. Yeah.
Not putting a plug for my former employers, but we also had a backup system on paper. Is that still happening, Tracy?
Paper?
Yeah,
What's that?
that's strange thing. No. Let's see, 2014, it's almost 10 years that I have been gone from that institution. But there was a time, even if you, because let's face it, a criminal isn't a criminal because he's smart. In most cases, if you're dealing with cash, if you put in $10,000 in a day by going to different locations, we are a small jurisdiction. And from what I remember, their Royal Bank has a wide network of ATMs at which you can make deposits. Right, so you can electronically track it. You will not escape. When the police turn up at your door, don't quarrel, because the deal has already been seen. Anyway, do we have any other questions or any matters of interest?
just to add to his point, well, a different variation. He was saying different locations for the same bank. But what about if they use different banks? The banks don't share information to that level.
I may be lost, but I'm not sure if you can make deposits to your account from another bank's ATM.
No.
What are you saying? Just
you
help
have,
me out.
you have an account at RBC, you have an account at CABC, you
Uh-huh.
have an account at a credit union, right? You make a $5,000 deposit to each one, say Monday, Tuesday, Wednesday. How are you gonna, and that's over the threshold for the 10,000.
Yes, but
how are you gonna pay that?
it means that each individual transaction, that bank has to look up your banking habits, your deposit habits, to say if this transaction looks suspicious. Because if you only work and deposit money at the credit union, $500 a month, and you come one day and deposit 5,000, isn't that suspicious?
What you're saying is very valid. And there's no, at least in the Barbados environment, there's no sharing of information at that level to be able to do that. So the individual institutions involved in the scenario that you're presenting would have to make a call based on their KYC relationship with you. That's the only thing a bank can do with that scenario. So if you have all of those accounts around those different institutions and you haven't been consistently depositing funds at that level over a period of time that the institutions individually are happy with, then they would make the call not because you went over the limit, but they would make the call because the transaction looks suspicious to them because your habit is not something that is consistent with what they have seen. So they would catch you from a different perspective.
And just to add, I mean, if they do file SCRs and it happens through all of your banks, because let's say you have those 5 different bank accounts from different banks, out of the 4 of them, you don't use them. So all of a sudden you have this $5,000 deposit. An SDR is filed because it's not in line with your customer profile. That's not what we understand you to be depositing. You file this SDR, when it goes to your FIU, they're gonna get 5 SDRs in your name. So that's really the only point in the chain where all of the information will be together.
When it gets to the
FIU. When it gets to your FIUs. That's right.
Great example.
Are there any other? No, I'll do this like an auctioneer now. Are there any other questions? Going once? Going twice? And I consider that particular issue closed. And it's just my duty now to thank the panelists. I don't want to call these names wrong. Sunita, I can manage. But the
Just Cindy is fine.
Sunny, right. Cindy, thank you. I can find you just up the street.
Just up the street.
Yeah. No, I'm not trying to find you. Last one. Okay. There's a final question for the panel. And again, I'm sorry. Ladies first. With the rise and realignment of cryptocurrencies, introduction of fintech companies, pushing radical changes to the norm, and the geopolitical pressures of war, China's influence, Africa's push forward in the region, what are the impacts on AML, KYC, fraud, and cybersecurity that are around the corner? So again, we are looking forward, viewing 2024 and beyond.
So I could go first from the standards perspective. So earlier today when I presented, I did indicate that the FATF standards does now take into account virtual asset service providers. So of course, if you engage in the sphere of a virtual asset service provider, you are now captured by the standards. You have to be regulated, you have to have your KYC and compliance quite similar to a bank. So a lot of the rules that a financial institution and a DNFBP would have to follow in relation to the FATF, those things now also apply to virtual asset service providers. So specifically from the standards perspective, we do capture it from a regulation point of view.
From a practical point of view, it's very interesting that question, although it's a little long, and I probably forgot the start to the finish, but it talked about wars, it talked about cybersecurity, and talked about sanctions, I believe. And you'd be interested to realize that from a practical perspective, those three things are quite interlinked. Very often, cybersecurity breaches come from high-risk jurisdictions that are engaged in war. And as mentioned by our previous speaker, they're sitting down while you're in your bed sleeping, you know, it's daylight in their zone, and they're up and they're dedicated, fully funded, and fully supported in breaching systems. So, and they're doing that with the objective of getting ransomware or other means of phishing and other different means to be able to get monies from you to fund their cause of war and illegal activities, terrorism, money laundering. And very often they're the same jurisdictions. North Korea is an example. Nation-state actors, that's what you call them in the IT industry. So that's interesting. So no. So you see it, North Korea, China, Russia, you said India as well, Pakistan, the usual suspects. And those many of those overlap with the high-risk jurisdictions, North Korea, Russia, China. So, I mean, at the end of the day, you would find that there's a connection in that question. From a practical perspective, if you are screening and monitoring your transactions, especially your cross-border transactions, guys, when you're doing those cross-border activities, you have to be able to know the countries they're going to and from as well. Not just the names of the individuals need to be screened, but the jurisdictions. And that also needs to cause a pause in your review, where you can stop, take a look, and ask questions about the nature of those transactions. And China, I mean, China is on that list of national high-risk countries from an IT perspective. It's not necessarily on the high-risk jurisdictions from an AML perspective, but yet you still have to be mindful of some of the connections in terms of transactions that may occur. So you have to stop and sometimes look at them to verify the type of transaction it is. What is the purpose of the transaction? So it's just a very interesting question, but those things often overlap.
If I may comment, I don't know that I feel comfortable that we have our arms around it, because we have real transactions. Like most of the high-paying academic students globally are Chinese, and their parents send funds for them. But China is a nation-state actor, just to put that in perspective. We have a lot of issues coming out of Africa. Most African countries do not have the capability of correspondent banking in the West. Barbados is opening up quite a bit of financial transaction activity between Barbados and Africa. I'm not sure if we're fully ready for all of that. I'm just saying there's some really practical situations because these things are all interconnected. And from a regulatory perspective, I'd encourage the regulators to take a closer look at all of it. Barbados is now, I call it a university country. We have got so many universities here that I see around. It's fantastic to watch. It's great, but these are all foreign students coming from lots of different places in the world to do interesting study. Funds are flowing into Barbados to pay those school fees and flowing through the banking system. Do we truly understand all of that? It's a true question. I'm not here to disparage anyone. I'm just saying regulatory bodies, banks, you have a lot to look at, because Barbados is a tourism state where people come with their own money, spend it and leave. It's one thing. But when students are living here and you have funds flowing in and out, they buy properties, all kinds of things start to happen. you need to start considering that. So all the examples given earlier about real estate transactions, lawyers helping with escrow, et cetera, just got magnified because of the relationships that we're working ourselves into. Just something to think about. And that's going to be my closing comment.
It's just a quick comment. All the things that you've just mentioned, they are no different to anything that is happening in the UK. And we're talking about higher volumes of money. I mean, school fees over there are tremendous. The number of students going to that jurisdiction, buying properties and whatever. So it's happening here, but on a smaller scale, as you said earlier. So what is the difference? African students, Chinese, wherever, they're coming from all over. To go to school.
It's happening in the US as well. So I'm going to use the US as the example. So I don't think I mentioned this before, but I was the head of risk architecture for JP Morgan for 5 years, monitoring that across 14,000 branches on the West Coast and looking at those funds. The issue is that a lot of those students' fees come from places that have nothing to do with their parents. And as a bank, we had to be monitoring that on an ongoing basis, right? Foreign students, they go to the top schools, they pay really, really, really high fees. They come in, and the first thing they do is buy a property to do something. And a lot of 2 or 3 of them would live there before they buy the second property. And the properties are not low-end properties. They're very high-end, very well-established property locations. And when you do the research on them, you do the research on the source of funds, you realize you have a lot of issues. This is not a comment from a lack of experience. This is real. And what I'm saying for Barbados is, yes, it's small, but from a regulatory perspective, the book does not look like the cover. You must open it and go into the pages in a lot of detail, in a lot more detail than any of those technology platforms we were talking about, right? So sourcing funds, tracking funds, tracing funds is an ongoing business. And when you get into these spaces where people understand established ways of moving money and cleaning it up, it's not always drugs that is involved. And educating children is a huge thing globally, but it's a significant way of cleaning up funds.
Are there any further questions, comments for this segment? I guess not. So, as I said before, going once, going twice, going 3 times. I want to express my thanks to Sunita and oh there. I'll just call you Cindy. And Keith, a name I can relate to. I also want to thank the combined audience, but I am not here to give you closing remarks because there's more to go. I just want to thank you for being here.
Thank you. Thanks, everyone.
And listening to me.
So we want to thank the panelists on our last panel. Just for you to know, a very important part of this program is the cocktail reception that follows after. Edward will give you a little bit more detail about exactly where that's going to be, but it's right here on the property. So I just want you to stay around. I know you've had a long day. I know it's Friday evening. You're ready to get away, get home, but please stay. And it's Friday. You can have your Friday lime here. You can just have a little refreshment before you go off home. So what's left for me to do is to invite Edward to give you the closing remarks and the vote of thanks.
I must say that I think that this conference itself was fantastic. Thank you. I want to share a little story how this all came about, and we have to blame Alan Hope out there for the reason that we're here today. I think we had a session, and he called me and said, you know what, we need to talk about AML and cryptocurrency. Cryptocurrencies wasn't a problem, but AML said, well, Alan, this is really about, you know, about not sorry, AML is really about the banks and not something that majority of security persons are really terribly interested in. But in communicating with some other entities, the whole session moved from an hour. Let's say we want to do an hour and 15 minutes. It went to half of a day, full day, 2 days. And we want to actually, you know, bring in some other delegates, but the time was very short. I think we started to conceptualize the conference around, I think June, and propose a date for September the 21st, and you know, including the ministers wasn't possible. I think they have cabinet, so it was moved to Friday, and eventually then on this particular day, November the 10th. So we have actually added Kimberly. I think it was very, very good, Kimberly. Not saying that everyone else wasn't, but we had to also add the security aspect for the financial sector. We could not talk about cybercrime and other financial crimes and not connect both, understanding that it's not going to get any better as time goes on. The reason why is the heavy digitization. Sagicor Bank, we also have Venti Group. Forgive for the mistake on the conference. The name was changed from My Ready Cash to Venti Group. It has to be correlated. And I think that the conference has brought out quite a bit of it. We didn't want it to be heavily into cybersecurity, but to also provide that insight that we have, especially going into 2024. We are fully digitized. We have digital IDs. We have Sagicor Bank, Venti Group. We have a lot of applications being used. We have the legal fraternity. I know we have received bills from online customer service management system, etc. So a lot of these things has expanded the attack service, or the threat landscape have actually increased for every particular business. And it means then that I know many of us like to focus every single day just on our jobs. I know one want to focus within the cyber element of it. While we might have persons operating in that area as one of the tables I was communicating with, many of the tasks is forced upon the IT department, IT unit, and it's really not fair. And we continue to alert the businesses that when we think about security, security is really not an IT problem, but it's really a governance problem. It's really a problem that starts from the top. And if you look at the SET, just in America, persons are now being held accountable. And especially for America, we want to see more for the boards and CEOs. But the fact is that security is a problem that covers many domains. In our area, we call it the governance, or the if you want to call it the government itself, setting the strategy and policies, coming down to the people, the processes, and technology. So for anyone to think that security is a problem within the IT, I mentioned 4 areas just now, and we only mentioning IT as just one of them, which we know it cannot operate. And when it operates like that, we continue to see more problems. Today we have, I think as of yesterday, I think it is, we know everyone would have heard about Move It. We now have, I think, SysAid, which is used, I think it's an IT help desk type of product. And if you thought about Move It and all the previous solutions that would have been compromised, have compromised big companies, we now have SysAid. And we have to take cyber risk management to be very important. I think we might move away from saying cyber risk management a little bit. I said business risk. The business resilience is very important. And encompassing cyber risk into your business risk management processes is going to be very important. We believe, especially going into 2024, it's not going to get any easy. Our threat landscape is expanding because of the range of tools that we are using. So again, I want to thank everyone who have come today. I want to apologize for Michelle not being here. She had to go off to, I think, another event that they're actually hosting right now. So we thank her for being here. Mr. Dion Greenwich is currently overseas. So we also want to thank the Sagicor KFL School of Business. They have done a tremendous in bringing us all together and communicating at many different levels. So again, thank you very much. And I want everyone to enjoy the networking cocktail that we have next. And I hope that in the next coming days, we can, well, this is this Friday, but in next coming days, we've sent out a survey and we want to initiate the UWI. Cindy would have made some comments, like I can't remember the other lady name, in terms of compliance. I spoke with Dion many weeks ago, and I said to him, we need to incorporate compliance into leadership, into general management. Our belief as a company that comes 2024 plus, every business need to understand AML, or at least integrate some level of policies. For us, every time we work, even with Cindy or somebody else, we need to understand what risks to bring to our business. When we work with some trainers within the ISO, we need to understand, we send out large sums of money, who they really are. Are they really doing what they're supposed to do? Although they are recommended by our partner, we need to also make sure, we need to also check their background. Even communicating sometimes with Keith. I know he's doing the same thing, but you always need to check. And that's what we want to bring to the table. In the financial sector, it's already established there, but in other businesses, it's not. And this is where we talk about third-party risks. For our area, we might talk about third-party providing services, a SaaS solution or whatever else it is. But I've been communicating with Cindy and Sunita. You know, the banks look at us as a customer, but what are we doing to make sure that we don't inherit that risk by, you know, for instance, as in manufacturing sector, it could be taxi drivers, whatever the situation is. So again, thank you very much and have a wonderful evening and weekend. Thank you. The cocktail is in the same location that you had breakfast this morning in the dining area. Thank you.